Yeah, in a minute. Hello, welcome back. It's my pleasure to present Nicolas Weber, blockchain enthusiast, entrepreneur, philanthropist, writer, and investor. Nicolas is mainly focused on tokenization, DeFi, and staking. He believes that decentralization, transparency, and public accessibility can transform the global economy and give access to storing and generating wealth to the unbanked populations. Also, Nicolas believes that blockchain will innovate other broad and widely used data-driven applications in industries such as trade finance, IoT, AI, supply chain, healthcare, and more. The title of Weber's presentation is rather a question today. Are tokenization and DeFi together reshaping the financial system? Without any other delay, I'm leaving the stage to Mr. Nicolas Weber, please.
Thanks so much for the invite. I hope everybody can see my presentation. It's a pleasure to be here today. As you mentioned correctly, my kind of presentation today is on are tokenization and DeFi together reshaping the financial system. And yeah, with this further ado, my name is Nicolas. As you mentioned correctly, I'm head of business development at Amazing Blocks, and I've been dealing with the blockchain space for quite a while. So yeah, looking forward to share some insights on this topic today. So first, I would like to start with yet another question. What will you do with your cash? You know, we all know it, inflation is looming around, and really the question arises, do you plan on to look at your bank account and wait your cash purchasing power to diminish by around 4% per annum, or even more in the future, right? So this is quite an issue that we're increasingly facing. Why is that the case? Well, harming monetary policy of central banks has had a bad impact on our current financial system in general, right? Of course, on the one hand, it helped guide us through, to a certain extent, through crises like 2008, like with the recent COVID crisis. But on the other hand, it really decreased the value of fiat. The looming inflation rate is, as mentioned, around the corner, and negative interest rates harm everyone that is just holding cash, right? So the question arises within the legacy so-called CeFi system, or what will you do with that cash? Obviously, there's people that are already holding most of their cash or their portfolio in assets, but there's others that do not do this, and they do not have the knowledge or the education per se, or the access. So really, this is a huge problem that we're all facing. I mean, there's high inflation rates in jurisdictions. In other jurisdictions, it's picking up steam right now. So it will definitely be a topic that we all will have to deal with sooner or later. Let's take another example. If we leave, let's say, 100,000 euros on your bank account, it will be approximately, with the given numbers below, the negative interest rates of -1%, consumer price inflation of around 3%, and asset price inflation of around 7%, be worth around 96,000 euro in 1 year, right? So that's a significant decrease, I would say. Also, not only are institutionals or educated investors picking up on that topic, right? Also, retail investors, as you can see here in the search and interest inflation on the Google Trends, are also now slowly but steadily picking up steam. And you can see also, especially since January 2020 and with the recent crisis, this has been picking up momentum. So as mentioned, you know, it's not only the big players or the financial experts, right? It's also the retail investors. So and so far, maybe in the last couple of weeks, it has been a topic more or less in some media, but still it's not yet there at this stage where we would all expect it to be in the future, when especially mainstream media is picking up steam on this topic. Just to give some examples, right, of things that are already happening. Bank deposits remunerated at a negative interest rate in Germany. The Germany, where more and more banks introduce penalties to interest deposit to cover costs incurred by ECB negative interest rates for bank deposits. The Bundesbank estimated 77% of all company deposits and 42% of private customer deposits are now penalized. Also, German import prices rose by 6.9% year-on-year in March. That is the biggest increase in exactly 10 years. Also, the MSCI World, obviously we all know assets, although right now, just today, there was some drops in the crypto space, still assets are fresh off all-time highs. And generally also, if you look at typical hedges against inflation, right? And I'm not just talking about what everyone's speaking about right now with Bitcoin, but also others like lumber, gasoline, heating oil, copper, and so on. They're picking up steam in regards to their value increase over the past year. So the signs are there, right? And obviously a question arises, how do we protect each other or ourselves from this? When we compare cash versus, for instance, tokenized real assets that are made accessible to anyone, we have potentially a good solution to this, and hence a protection. If we look at these stats here right now, obviously you can see that while on the other hand, cash is decreasing, right? When we hold, for instance, a real estate property with an asset price inflation of around 7%, it's increasingly steadily. The assumed inflation rate here is 3% for both scenarios, right? So this could and will potentially be a good reason for this. Though, obviously, if we look at the current financial system and the structures, it's for a lot of people quite hard to gain access, especially to illiquid assets such as real estate. As mentioned, invest all your money in real assets and you will be illiquid as well, right? So it's not just that we have illiquid assets, but also we will be illiquid if we invest in them, let's say real estate. So what is the solution here really? A compliant tokenization structure, right? So we need to have a structure, and I will get into this in more detail in a second, how we can on-ramp, real assets into the system where we can leverage it and make it accessible. Also, we need intuitive investing into tokenized real assets. And on the other hand, we need to have efficient tools to regain liquidity, right? A potential example here are collateralized loans, whether through DeFi tools, common ones are, for instance, MakerDAO or Aave, or whether in a compliant manner, which is also currently picking up steam with financial institutions that are to some extent copying DeFi in a compliant manner, which could give some trust to at least people that are slowly entering this space. Let's take an example. This real estate object could increase from 1.5 million to 1.8 million. This is an apartment in Munich, which costs 1.5 million in May. It's an example. It has approximately 150 square meters. And a price of, let's say, 10,000 per square meter is the results. Historically, real estate prices in Munich increased with 7% per annum. In 3 years, by 2024, asset price inflation will raise the price to 1.8 million, which is assumed to be 7% per annum. Hence, we have a good hedge against inflation, right? That just underlines the statement earlier made. How do we do this? Right? If you look at the current legacy structures, it's quite difficult to on-ramp, so to say, real-world assets into the token economy, which can, as I will also show you later in a bit, be a good hedge. Although what we need is, on the one hand, progressive regulators. There's jurisdictions that are picking up steam on that regard. There's a lot happening right now, even in larger jurisdictions such as Germany and on the EU level, but also, for instance, in smaller jurisdictions such as Liechtenstein, Switzerland, Malta, Singapore. Though this is not enough, right? We need legal experts that understand, on the one hand, the legacy systems, and then can, on the other hand, find compliant ways, as mentioned earlier, for instance, with a bank potentially leveraging DeFi tools to on-ramp these assets. Then on the other hand, though, we also need a trusted technology. This could be, for instance, Ethereum, but also other blockchains would surface, on which, as dApps, DeFi tools can be leveraged, right? And then we have a good merge between tech and law, which again is obviously already happening and to a certain extent in the legacy financial system. However, not in an efficient way, and especially not in a way that is accessible to everybody. It's accessible maybe to large volume individuals, it's accessible to institutions, but not to everybody. So we need something that allows everyone to have access to this and allows everyone to invest in any asset that they like, whether it's with $1 or $100 or more. It doesn't matter, right? We all need to have our own chances to gain access to this. So how do we really integrate this? On the one hand, we have the issuer perspective, obviously. So there you have, for instance, a software that is leveraged to on-ramp these assets in the form of, for instance, equity tokens, which are at the end of the day digitized shares. Then on the other hand, we could though have debt tokens, which are like bonds, for instance. And there's a lot of other options here that we can leverage, like, for instance, participation right tokens, like ownership tokens. But generally, you can see, right, there's a vast spectrum of different tokens that are defined by law in certain jurisdictions and can then allow an efficient on-ramp of these assets into the token economy with legal compliance. And really, it's not so much of a magic like some people may think, right? At the end of the day, in certain jurisdictions, when you leverage an efficient model, right, the asset at the end of the day is becoming like an accessible, tool where everybody can have a share of, whether it's 0.001% or whether it's 1 or 10%, but you can still have access to it. And then on the other hand, obviously, when we talk about blockchain in general, right now, tools to leverage blockchain are not really intuitive yet. If we look at the internet, for instance, if we ask people on the street, people will not be able to understand the internet, but we have intuitive tools to leverage the internet, to leverage the benefits. And this is the same that needs to happen in the blockchain space. And then we have an efficient structure, right, where we have the convergence of the issuer and the investor meeting in a decentralized ecosystem and allowing to exchange value. This allows in turn also for everybody, institutionals, retail investors, anybody, an enhanced portfolio diversification. So when we on-ramp these assets, as mentioned, we have different types of tokens that we can have. We can have all kinds of assets integrated, whether it is gold, solar panels, or windmills, SMEs, cars, classic cars, machines, intellectual property rights, or patents. It doesn't matter, right? Anything is from a neutral perspective and a legal perspective, with so-called models like the token container model, where the token acts as a container for the underlying asset, the right or the claim to it, pretty efficient to leverage. So let's take this into a quick example. When we look at CeFi, right, it's costly. Everyone knows it. Like, transaction fees are quite high. It costs time. Everyone knows that when you make a bank transfer, it can take a lot of time. It's illiquid, right? So if we take art, real estate, or anything, it's really an illiquid asset. You may have the value somewhere on paper or just based on the market value, but you cannot leverage this really. You have friction because there's so many, especially on a global scale, intermediaries involved that in turn then also cost time and money. Then additionally, there's a lot of paper-based systems and localized structures, which then in turn lead to a low degree of innovation. Obviously, there's here and there innovations happening, but however, it's not in the same speed that is aligned with the technology. Then on the other hand, when we look at DeFi, we have the diversification, we have transparency, we have accessibility for everyone, and especially crucial is we have fractionalization, right? So we can fractionalize ownership of any type of asset, so anybody can participate, which in turn allows us to have liquidity for these assets. And in turn, again, this allows us to have a much more efficient financial structure and ecosystem. This is a steady evolution that is not just, happening overnight. It's been slowly but steadily picking up steam, and especially recently even further accelerated. Let's give some examples, right? There have been a steady and coherent evolution from Web 1.0 to Web 2.0 to Web 3.0. So basically, it's just a logical next step that we kind of enter this token economy of the future, which is in turn reshaping the financial structure and how we actually see and look at finances. There's new models such as governance tokens, which can be similar to, for instance, equity in a company, right? Because you can govern an ecosystem. There are new structures or systems such as burning tokens, right? Which can be to a certain extent compared to share buybacks. So it's not like magic or something completely new. It's just more efficient structures potentially. Then also, while we all know that the crypto markets, for instance, and the entire space is quite new and very volatile, we've just experienced it today, there's still a steady adoption curve. If you look at just the wallets of blockchain users, it quite differs from the actual, you know, markets and the kind of structures of the respective assets, right? How volatile they are, they go up and down, but the actual adoption curve is just steadily continuing, right? So really, we have to differ between maybe a hype and also an adoption. Then there's experts and researchers like Finoa in Germany that project that by around 2027, around 24 trillion will be tokenized in terms of assets. So this can be listed equity, unlisted equity, investment funds, bonds, home equity, and generally other financial assets, as mentioned, such as real estate. Also, locking, for instance, tokenized assets into DeFi tools for collateralization and so on is already happening. It's not something that will happen in the future. For instance, the overall value of assets and value generally locked in DeFi has been steadily increasing. And also Ether or Bitcoin, which some native crypto assets are already locked significantly. So there's above, I would say, 5 billion of each already locked in DeFi. So to kind of sum this up in a nutshell, I would say the future is limitless here, and generally DeFi and tokenization are reshaping the financial system. And I would like to kind of conclude my presentation with a quote by TEDx speaker Roop Singh. As you discover what you find valuable, the only question for you, what might you tokenize? This was my last word. I would like to thank everybody for listening, and if you have any questions, feel free to reach out to me. Thank you.
Thank you very much, Nicolas. It was an interesting perspective. Just hold a second. I will check if we have any question for you. So, no, I think we have not. Just a second.
Sure.
I don't think we have any question. So thank you again. And a pleasure to hear you. It was a real pleasure.
Thank you. The pleasure is mine. Have a great day.
Have a great one.